the price action of DXY, dollar index, on a weekly time frame. You will see we posted this last week. I would like to make a review to see the direction of DXY and how it affects other USD pairs. So in 2021, we formed a double bottom. A double bottom is a bullish price action, and price broke the neckline and retested and left. You can see very clearly the break of the neckline. This is the neckline of this double bottom. They don't always come in a perfect shape. But what we look out for is the breakout of the neckline and a retest. This is the neckline. This is the breakout of the neckline. This is the retest. And if we invoke our strategy, which is break and retest strategy, then you see it apply here in combination with the double bottom. We had a double bottom. This is the structure. This is the structure, double bottom. Breakout of the neckline, price retested, and we went all-time high to the moon, to the moon. So this is another chart pattern that I've played actively. Then we return here in the month of August into October. Price and we're heading into US election. We begin to see some volatility in USD. Price has returned on this descending channel and formed a double bottom like we had in the past. So you can see the price will go and come back, then head to the moon again. That's the price action. So to buttress our point, we like to look what that level holds. Where is our supply? Where is our demand? So we'll come here, we look for this floor as demand for DXY, and where is our supply? Here is a supply roof. So we had this post in our previous posted last week. So we just looking at it to make some modifications, and it is what it is. So when price broke this resistance structure, what do we have here? A resistance structure. This is an old chart. You can check last week we posted on YouTube, we posted on Telegram. If you are following me on TradingView, I have a couple of ideas in TradingView where we post all our ideas in real time. So the price came here, retested the structure again. So we now have an ascending resistance structure, and a break of this structure will turn it to a demand floor, because the previous resistance broken will become a support. And price didn't disappoint. When price returned to this level, it bought. It returned to the level in the month of July and bought. Returned in the month of June, January 2024 bought, and the structure was broken in August for us to meet another support floor. I would like to change the color to make it easier and clear. I will change it to a black color. So we have here a support structure. We have another support structure. We have another support structure showing that there is demand at this level. 1, 2, 3. Before the break of the support structure. As price broke the support structure and came to the demand zone, A previous demand zone, I will change it to blue. So price return here and got rejected. That's another demand floor. A previous supply roof, when broken, becomes a demand floor. So the characteristics are interchangeable, meaning no bias can stand the test of time forever. Every bias holds temporary view, holds temporary ideology, based on the fundamental the day presents. If we have a more volatile and more hawkish fundamental analysis, DXY is favored. If we have a dovish fundamental analysis, DXY is on the bearish side. So no market structure can stand forever. Every fundamental analysis, especially decision of the Federal Reserve, FOMC meeting, and other economic data are bound to affect market structure. So when price return to the demand level, a previous supply roof, now a demand floor, and price respected on multiple times. So a second return to this level create another bullish impulse that push price to the upside. And we went to meet another supply roof where we have multiple sell order. After the breakout of the structure, price retested, and we have held this floor as a current roof, rejecting price, rejecting further uptick. So it will be okay to put some points to it and hold it responsible. A break of this supply roof is going to be a demand floor. So we will be watching the price action as DSY on a weekly time frame has formed a double bottom. Double bottom is a bullish price action, also signifying change of trend from downtrend to uptrend. But the only valid confirmation needed for changing bias will be the break of the neckline. If the neckline is broken, we wait for the retest of the broken neckline to see the presence of liquidity pump for further uptick. So this is the price action that affects Euro, JPY, GJ, AU, ZAR, CH, Swiss franc. So technically, the price action of the XY have a direct correlation, a direct market effect on all the pairs mentioned. So when the American DXY is on uptrend, EU experience a bearish price action. AU will experience a bearish price action on DXY uptrend. UJ, Japanese yen against USD, will experience a bullish impulse. The British pound sterling against USD will experience a bearish impulse. So now we have DXY form a double bottom, which is a bullish price action. And price is moving after break of the next neckline. We expect a return to the broken neckline. This return to the neckline will give AU, EU, GY, JP a breeding opportunity to reset the market and set in the direction of the impulse of the XY. So the XY have found support, stopping it from further slide. And coupled with the US election coming forth, we will begin to see some volatility in the XY price index. Such volatility in DXY we begin to see a reversal price action in all DXY pairs. It is very important to understand this strategy. And when we look at it from a structural perspective, we will see that DXY is setting itself up for a big payday. So we'll continue to see how the price moves from here. So DXY will continue to experience a bullish impulse, giving us AU sell, EU sell, GU sell, UJ buy, USD ZAR buy. So we expect change in trend as a result of the change in DXY price action from the downtrend to uptrend. But before we conclude, we like to apply our strategy where we have a supply roof and a demand floor. We call it support level. To be more technical, we call it a demand floor. A demand floor with a very strong price action. Head price in the month of May, head price in the month of June, head price in the month of April. Break of the structure to come to a previous supply ascending trend line, now serving as a current demand floor. Price upticked, push price to the supply roof. And when we got to the supply roof, sellers took price down again to return to the previous demand floor. The demand floor was broken in the month of August to return to another support level, which was also acting as a demand floor in previous times. Price returned and got rejected. A previous demand floor become a supply roof, and price sold off from this level to return to the demand floor again, peak liquidity and broke the structure. So the previous supply roof has been broken, showing that buyers are going long. They are going long. So a breakout of this structure indicates that price will come down and move. So if we apply the one candle rule says that buying for DXY will be in 101.806. So in a common week, we want a return into the broken resistance structure to become a current support structure for uptick. We hope to challenge and confront the supply roof where price have been held actively from further upswing. So understanding the principles, understanding the price action of the SY plays a key and vital role in trading all USD pairs. It gives a clearer understanding in all that has to do with USD in trading the financial markets. So we will be looking at it and look at the prevailing market fundamental analysis that will be coming into the week, and we'll be watching the price action actively. So for here, this is another price action. This is head and shoulder. Head and shoulder is a bearish price action. You can see the left shoulder, the right shoulder, and the head. This is the left shoulder, this is the head, and this is the right shoulder. The break of the neckline, price went for retest and gave us a fantastic drop. So this build up played actively. This is the neckline. The neckline is, let me put it yellow. So the yellow neckline broke when price came back, retested the broken neckline, and price dropped. On getting to the floor, price have formed a double bottom, another bullish price action, and DXY have shown a significant push to the upside. So the rate cuts didn't have much effect on the strength of DXY. So this is the graphical interpretation of the structure of DXY. So henceforth, it will be wise to keep only bias that favor USD for all USD pairs. Technically, I'm saying that AUD USD look for a sell opportunity. GBP USD look for a sell opportunity. USD JPY look for a buy opportunity. USD CAD look for a buy opportunity because we already have from DXY, we have a bullish price action. So for every correction to the bullish price action, we reset every pair of USD, setting it up in favor of USD. So this will be the perspective for the week. So we expect trend and analysis to follow this direction. But however, there are negative fundamental analysis that hits hard on USD. So if we have data reports more dovish, we could be seeing a more disfavorable situation for USD, giving other pairs advantage. So we will stop here for DXY and look into possible reactions in the bond and bond yield. So we'll be looking at 10-year bond yield, 30-year bond yield for DXY or USO2Y. So we'll look at it to see the performance, and we will come back to compare the bond yield, the bond, and the DXY and how it plays a role in other assets.